I see possibilities. I'm not a check the boxers. I never have been. Gatekeepers are not paid to take risk, right? So the barriers are even higher than they could even imagine.
I'm Ethan Devitt, and welcome to the 50 Faces podcast, a podcast committed to revealing the richness and diversity of the world of investment by focusing on its people and their stories. I'm joined today by Raudline Etienne, who is the founder and CEO of Daraja Capital, an investment and advisory firm providing seed capital to new, diversely owned private fund managers and independent sponsors. She has over 25 years of experience in institutional investing and consulting, and previously served as CIO for the New York State Common Retirement Fund, the third largest public fund in the US. Prior to her role as CIO, she spent more than a decade advising institutional investors at firms such as Rogers Casey and holds a number of trustee and board roles. Welcome, Raudline. Thanks for joining me here.
Thank you so much for having me.
Well, let's start by going back to your background. Can you walk us through where you grew up, what you studied, and some of your early professional roles?
Sure. Whenever I meet anyone, I am always interested in hearing their journey, and I often share mine, and it takes 30 minutes. I'll try not to do that this time. I am Haitian. I was born in Haiti. I came to the United States when I was 4, and I grew up in Brooklyn, New York. I come from a family of doctors and nurses who thought that should be my destiny. That is a destiny that I did not want to be a part of. So my journey is navigating the United States and its educational system to find the profession that was right for me. As an undergrad, I studied architecture at MIT. I thought that architecture was like medicine and was like law. It was a profession in which you could earn a decent living and be respectable. What I realized is you are as much a struggling artiste as you develop that craft as you are anything. And the realities of the profession versus my fantasies of the profession led me to a career change. Literally, at the firm that I was working for, which was a small residential practice in New England, they experienced a downturn. And I realized that the last hire that I was at risk. And so when they got rid of their bookkeeper, I took over the books and realized that accounting, debits and credits came fairly easily to me, which led to a path towards accounting. I took a couple of courses here and there, temped, and ultimately ended up working at a firm called Pathfinder International in Watertown, Mass, in their fund accounting group. That is then what led me to pursue an MBA. My boss at the time, a gentleman who I've reconnected with through the powers of LinkedIn, his name is Joseph Pisani, said to me, "You're very talented, but I need to advance you. I need you to go get a higher degree." And he is the one who told me to go get an MBA, which is probably one of the more important pieces of advice I've gotten through my professional career. At that time, my family was still suggesting medical school, but I was clear that that was not going to be my future. And I decided to pursue the GMATs and ended up going to UC Berkeley and pursuing my MBA there. And I earned what is today known as the Towigo Foundation Fellowship, which changed the trajectory of my career. Because through Towigo, I was exposed to the buy side. My introduction into the world where I ultimately made my professional career was a day that Towigo organized for the West Coast Fellows. At that time, that was UC Berkeley and UCLA, to go to Sacramento and meet with CalPERS. And to be frank, I'm a New Yorker. I had heard of Wall Street, but I was completely unaware of this multi-billion-dollar pension investing industry. And that is where I made my career.
Well, it's funny because I think we're all unaware of that industry. It does a particularly bad job, the industry, I think, in revealing itself to undergrads, to students in high school, even to MBAs. It's an industry that is somewhat in the shadows until you go out and discover it. that's interesting how you came to that. And obviously, the role of a mentor in there quite pivotal. And it's also, I'd just like to note that Twigo has featured many times on this podcast. We've had Greg Williams, we've had Angela Miller May, we've had many of the advocates for Twigo and its supporters, and what a wonderful organization that is. And it has impacted many lives. So thank you for drawing attention to that.
Thank you. There are a lot of us out there, and we don't always know it because we don't have a secret handshake, but Twigo has been quite impactful on this industry.
And we will probably return to your architectural roots when we start talking about building a business, because clearly there's going to be some similarity there in the terms of the structure, the scaffolding, the design, and the vision. So I think I'd love to carry that thought through. But let's now go to one of your key roles here as CIO at New York State Common Retirement Fund, clearly a high profile fund, the third largest public fund in the US. There must have been some tremendous learnings and takeaways from that time.
Yes, there were lots of learnings and takeaways from that time, that is for sure. But the thing that stays with me was the nature of the opportunity and the transformation and the empowerment of the people who were there. Understanding how to do a cultural change in an organization to perhaps open to more creative thinking on a group of investment professionals was one of the things that I would consider my legacy and pride and part of the system change that lasts today. The way that I approached these things was to do what I would call a series of thematic investment challenges that encourage staff to think outside of their own boxes and to think differently about how they invested their portfolios. And there were three things I would say that were done that last today. And the first was sort of a management tool, but also an investment theory for me, which is I was interested in looking at opportunities around green investments. And what we called it back then was a green strategic investment portfolio. And what I did is I put a target amount of capital and opened it up to the entire investment staff, any asset class. Bring me your best ideas that fit into this theme. That was the start of creating some thinking that is outside the silos, outside the rigid definitions of what an asset class is. And it was one of those tools that I used that were transformative for the thinking of the people around me, but are also pillars that stand today. Green is now a sustainable portfolio. The second was opportunistic. My view of investing is less about the rules. I mean, I had worked with public funds my entire career. So I understood that sometimes you are constrained by asset class thinking as opposed to being freed. And I wanted people to think about investments just as things that would make money and to free themselves from the constructs and the parameters of just the space they operated in. And so during the GFC, I created another challenge portfolio. It was called the opportunistic portfolio. Bring me investment opportunities that may not fit your box, but you think will be lucrative and beneficial to the fund. That too has now become something that is a strategic asset class and lives on and has billions. And the third thing, again, was New York was an active investor in the emerging manager landscape, particularly around public markets. And one of our goals was to have a program in every asset class where we had external partners. And again, we put together groups of people across asset classes for all of the work that we were doing. And real estate was the last asset class for us to do. And it was the last contract I signed. And today that program thrives. There are firms that are been created through the work that we've done. I would say the metaphor I often use is that the trees are now bearing fruit from seeds that were planted more than a decade ago. And it's very satisfying. But that kind of creative thinking and how to execute it and how to free people to achieve a different way of approaching their roles was, I think, one of the most important things for me. Both the strategy and the lessons from it and the legacy of it were all very important.
When you do open the doors like that to opportunistic investments, and you are the third largest public fund in the US, you must experience an inundation of pitches, pitch books, marketing gestures. How do you navigate that? Did you come up with, because especially when you do go outside the box, it must open things up even more. And there probably is a constraint on staff. Would you say there was any kind of rule of thumb or method that worked well for you to just navigate through that volume?
A couple of things. First, I had a staff. There were heads of asset classes. They had staffs. And so the initial filtering wasn't being done by me, it was being done by them. I think the other characteristic of New York is that we had every partner. My joke is, I jokingly say we had every partner known to womankind, but we did. We had consultants, we had fund of funds, we had investment managers. I mean, it's a large portfolio with hundreds of investment partners. And so how you filter is it is not about the screening, it is about the investment idea. The idea was to actually think of things and look at things from a different lens than the I'm screening to eliminate, which is how the majority of this industry is structured. Now, in that world, you will never be able to view everything that is available as an opportunity. But with staff and with partners, there were always good ideas that were going to be bubbling up.
And that brings me now to Daraja Capital and the work you're doing there. But before we go into why you were prompted to start that and its main focus, I'd love to just trace how being an allocator at New York State Common equips you to spot talent and potential, which is your main focus today.
I think my experience as an allocator at New York Common is only one aspect of what equips me. The fact that I've been a consultant for more than 12 years, I should actually add it up. It's probably more like 14 years. It's not just the allocator perspective, it's also the fact that I was part of the gatekeeping community that was charged with vetting managers, right? So both of those things have resulted in me being exposed to hundreds, if not thousands, of managers and GPs through the decades of all flavors. And part of it, you can argue, is pattern recognition, having seen so much. I don't want to say you develop a spidey sense, but there is a natural recognition that comes when you're hearing something that it is either different or resonates with you in a way that makes you want to know more. I think so that experience and exposure and pattern recognition is part of it. I think the other part of it is also what is natural to me. When we talk about the architecture background, I go forward and say that is a tradition where you're starting with a blank piece of paper and you're creating. And in that context, you're only limited by what your imagination and your skill sets can produce. And so I think I have a natural orientation for seeing what's possible in people, which is also part of why I think I'm able to do this. I see possibilities. I'm not a check the boxers. I never have been. I mean, me telling you what some of my initiatives at New York sort of speak to that. And I think the talent recognition part of this business is not as fully incorporated as it should be, really. At the end of the day, we are all making decisions about individuals. Yes, it's helpful if you can be on Fund 13 and your mega fund. But in the beginning of anything, what you're doing is taking a risk on an individual or a team. And that is something that I've always done, even when I was a consultant, not just an allocator. It's something that comes naturally to me. So I have to say it's experience and natural proclivity on some level.
And it's interesting because it is about taking a view on individuals and trusting in them. And I think one thing that strikes me sometimes is how sometimes emerging managers have not spent a great deal of time out in the marketplace cultivating their relationships before they launch. So it takes years sometimes to build that recognition and that credibility, which maybe arguably should start before you actually strike out on your own because it takes
Well,
years.
you are spot on one of the key things that are critical to Daraja. And maybe we should pause to come back to it. But The reality is, we have a generation of investment talent, people who have transacted, who have experiences, who have done deals, have done round trips, have great ideas, and who desire to be entrepreneurs. But the transition from being a good investor to being a fund manager and an entrepreneur, where you're building a franchise centered on you and maybe your partner, is a different operation. And what happens a lot with emerging managers is they have not been exposed to all the aspects of the business. They were insulated from business development. There was a team doing it. They were not necessarily exposed unless they're the most senior people. They are not insulated, but they have supportive operational structures already in place for them. They don't have to create it. And I think the third thing is there is a leadership transition that has to happen when you're going from being a player to being an entrepreneur that's building something around you. And that requires some growth as well and some mentorship in my experience, which is why the advisory component of Daraja is as critical as the capital component from my perspective. And most GPs, most new emerging managers, I would say a couple of things. They don't necessarily know what is interesting and unique about them. They have no real perspective as to what institutional investors think and desire. They don't have a full appreciation of the barriers that exist. Listen, I'm a former consultant, so I can talk about my former role. Gatekeepers are not paid to take risk. So the barriers are even higher than they could even imagine. And so getting them knowledgeable and realistic about what is possible is part of the work that we do at Daraja. And it takes years. It does not take months. I mean, for some, if you're a spin out with a huge brand name, yes. But for the majority of the people I'm interfacing with, they don't have those kinds of networks and celebrities or support to do this. And so that value add from our perspective is being a trusted advisor, helping them navigate, helping them see, and helping them build a foundation for the future. The places where you're getting your first capital are not necessarily the places that you think, because there is not a full appreciation by the manager about the standards, the mores, the requirements of these pools of capital. And that learning journey is a difficult one and needs some seasoned partnership to help them navigate.
Well, let's, now that we've started talking about Daraja Capital, what was the key vision? Going back to the arc, you talk about foundations, and clearly I'm getting a sense of what the Daraja Capital bootcamp for emerging managers looks like, and it seems like it's intense and multifaceted. But what was the vision to start your own firm, and what do you focus on in terms of strategies?
My vision for starting my own firm is when I was at Albright Stonebridge, I reported to a board. I like being in charge of myself. And although I don't want this comment to reflect on prior bosses who I've had, most of whom have been wonderful, there's a certain freedom by being your own boss that appealed to me. Entrepreneurship has always been something at the back of my mind, and I just decided it was time to actually do it. And I started off doing consulting work. My area of interest has always been boutique firms. And so I started off doing advisory work with firms that I would call new, small, and niche, because those were just my natural attractions. And I realized very quickly that the advisory model was not going to work because these firms can't really afford you, right? They can't afford me. And although I can give them advice, although I can help them develop their narrative, understand what is unique about them, at the end of the day, what they really need is capital. And so the vision for Daraja came directly from some of that consulting work, but also the realization that it is really, really difficult to get your first yes. This is a business that is structured where people are first to be second. That first yes is so critical. And it is difficult to get it when you are not in the networks that have the money and the capital to provide it. The first yes is not going to come necessarily from the big institutional players. And what I realized after I left the CIO role and I created Daraja is that I was actually unusual in my willingness to go first. And I thought that was something I could bring to the table to help the ball move forward for diversely owned firms. I'm not going to quote the night statistics. Yes, we've made progress, but really, we haven't. And I thought that there was still opportunity for entrepreneurship in the alternative space. I think the robots are here for the long only space, but I'm hopeful that if for a few more decades at least, these are good businesses to start. And again, I've told you there's a generation of people who have track records and have the desire. And so I thought my willingness to be first would be useful for them. I think the second thing, an important thing that's part of the vision is this is a business where you need millions to sustain yourself during the fundraising process and to build out your firm. And if you don't have the personal wealth, and if your friends and family can't write you six-digit checks, you are locked out. And there is something for me that just doesn't work with that model. And I thought I could do something about it. And so I lodged Daraja Capital, the fund, in order to do two things, which is to be the first yes for GPs who aspire to start their funds in the private markets and to be the trusted advisor who is helping them make sure that they are setting up the right foundation. Because the first 2 years are going to determine what your future is going to be. Having worked with emerging managers throughout my career, all the red flags manifest themselves early, but teams are just so busy dialing for deals and dollars, they ignore them. And I thought that having a seasoned partner, someone who had seen the play before, aligned and engaged with the intimacy that's required. This is not a 4 times a year engagement. That intimacy, that partnership, I think is critical to help these firms lay their foundation.
And to hear that commitment by you, I think is critical for your investors too, because they know that you have massive skin in the game here because of the trust you place in the underlying emerging managers. And similarly, this advisory relationship, which, as you said, is a long-term one running through the course of time. I think that's a very reassuring thing to hear for them. And I'd love to just pivot a little bit to another theme because it is, you said you do focus on diversely owned, or you include diversely owned managers in your group at Daraja. And if you could comment on your career to date and your view of the diversity of the industry and what it gets right and what it gets wrong, and whether you've been impressed by any positive change in it.
The answer to the question depends on the day that you're asking me this question. Today, the glass is half empty, not half full. To be frank with you, we have made progress. Of course, we have made progress. I would not be doing what I'm doing if we hadn't made progress. 30 years ago, this kind of entity did not exist. Well, maybe there were a handful of entities, but they were doing other things. And so, yes, we have made progress. If we've looked at the work that Twigo has done, yes, we've made progress. We're all over the place. We're CEOs, we're fund managers, we're on the allocator side, we're bankers, we're CFOs, we're everywhere. So, yes, but the magnitude of the progress is not sufficient for me. All of this work after 3 decades, let's say, of this movement leaves us with less than 2% of the control of the assets. And the control of the assets, the ownership of the assets in this side of the business is where the wealth creation happens. And that frustration about the lack of movement on that front is partly also why I created Daraja, because that statistic infuriates me. So, yes, we've made progress, but it's not enough and it's not fast enough. And although I won't comment necessarily on initiatives, I mean, I'm part of the view of everything that's done is additive. I'm not one of those people who thinks we shouldn't do this and we shouldn't do that. I'm also not one of those people who think, this investment is too small to be worth my time. That is not my natural tendency. I am much broader and open to all bites at the apple in terms of getting forward movement. I think the thing that needs more attention is getting more people from the rising majority, more people in positions to control the capital. And I see progress in the consultant community on some level. I mean, back when I was a consultant, we could count probably on one hand how many Black women there were in particular who were in the consulting industry. There's a lot more. I think the place where our industry needs to put more emphasis and intentionality is around the allocator side. When I was at New York Common, we could move the ball in a strategic way that lasts today. We need more of that.
And I would suggest yes. And I think it's doing probably the allocator side does slightly better when I look at the diversity in public fund employees. But I think they also need to do better in terms of making that a long-term proposition through salaries and benefits, et cetera. But I still think there's a bit of a gap there. That revolving door continues. Another way of having influence is through governance and board roles. And you have a number of them. If you just touch on, for you, what makes an effective board member?
I've worked with boards my entire career because a lot of my work, a lot of my clients were public fund boards, right? Or even corporate pension boards. I think what makes a good board member is a couple of things. I think one is the ability to listen and understand what is happening from a collective perspective, and the ability to provide insight or share thoughts in an honest manner that helps bring the issue forward, whether it's challenging or not. And so I think it's both of those things. It's listening and it's the judgment and knowing that you can speak honestly to a group for a collective purpose or mission.
And going now to looking, you just described your journey and we've talked about setbacks and challenges that emerging managers can face. I'd love to know if there were any particular lessons learned of your own through your own journey that maybe you can share. And the reason I always like to state that the reason I focus on this is in order to help those coming up the ladder to see that their setbacks and challenges are actually a shared experience. And we want to normalize that the struggle is real at times.
Oh, yeah. The struggle is definitely real. That is for sure. There's probably a couple of things I would say about sort of lessons learned. I think the first is it takes time. For me, this is about failure, the moments where you have not achieved what you set out to achieve. And I think from all of these experiences or setbacks, there are lessons to be learned. And for me, the long term narrative is take the time to figure out what the lesson is. Sometimes the light bulb will come immediately. You know exactly what you did wrong. Sometimes it takes a longer amount of reflection to understand what the lesson was. That's the first thing is figure out what the lesson is. And then second, do whatever healing it is that you need to do to get over it if it's painful. And then lastly, keep it moving. Go on to next. I think the thing that's been most important as I reflect is about the ability to sort of get back up after you've been knocked down and to be resilient and to understand that it's always going to be a setback. It's almost a daily challenge. When you're an entrepreneur, it's a daily challenge. But the ability to get back up, to pivot, to adjust, I think is key. And one of the things that I have learned through a lot of the setbacks I've experienced in my career.
And let's talk a little bit about the causes that are close to your heart. We've spoken about the Trigo Foundation. Mentorship is core to that. And you clearly have had mentorship in your life. How do you pay it forward?
So it's interesting you say that because I've talked with my Twigo mentor, Nancy Sims, about this. And I have people who are officially my mentees. Usually they tell me I'm their mentor. And that's like, oh, okay, I guess I'm your mentor, even though I don't necessarily go, oh, this is my mentee. But what I realize is that I am actually mentoring the managers who are coming to me from the first time I'm talking to them. Part of that is my natural tendency. I'm a blunt person. I tell you exactly what I think. And when you are giving me a pitch or telling me about your aspiration, I'm reacting to it immediately. And so I will share my insights with you, whether or not we have a one touch or we're developing a long term relationship. So there's almost, and how Nancy characterized this is, it is almost unofficially mentoring and guiding. And I hope that everybody who has an interaction with me, even though they may not be a candidate for further review or diligence with me gets some perspective that makes them think about what they're doing in a way that they will actually improve. Occasionally, I am meeting with people and saying, here's what you're missing. Do this, get this, and then come back. And so it's not ever solicited, but I'm always giving advice. And I think that's part of the Tuigo ethos, really, is that we're giving back. And I don't have the time to be able to mentor the universe. I mean, there's a lot of people like, well, can you do this? Can we stay in touch? And I'm like, listen, I'm a limited resource, but I will give my perspective and share the wisdom that I have with everybody who I come in contact with who's actually interested in hearing it, because not everybody wants to hear it. And so that paying it forward and making sure that the doors are open. My career has been a career of I'm the only one in the room. And so if I'm not creating pathways for other people, then what is the purpose of me being in the room, is my view.
I love that. And my closing question is another greedy attempt to get at some of that wisdom, because we've already had a lot of it through this podcast. Any closing word of wisdom for us, or a creed or motto that you live by, whether it's something that one of your mentors instilled in you or something that you've picked up along the way?
I'm a broken record about this particular thing, and it is an outcome of my undergraduate experience at MIT, where a cadre of my roommates were part of the Shakespeare effort. So I saw more Shakespeare plays than I would normally. And so, to thy own self be true has always been a guiding motto that resonates with me, that I tell to the young people that I'm talking about. It is worth taking the time to understand your strengths and weaknesses so that you can execute on whatever desire, vision, plan that you have. And I've always, through my professional career in particular, have tried to figure out a way to approach opportunities, problems in a way that is consistent with my own knowledge of self. And I don't put myself in situations where I'm that uncomfortable, whether it's ethically or, do you know what I mean? And so I know what I have patience for. I know what I don't have patience for. I know what I'm good at. I know what I'm not good at. I'm sure there are more things that I'm good at that I don't probably admit to myself, but I am self aware enough to know that either I can achieve something or I can't achieve something, or that I have to balance myself out in certain ways, whether it's with team members or advisors or mentors or just friends, to get to a goal. And I think that if you know yourself and you trust yourself, then you are less likely to find yourself in situations that you don't want to be, because you know yourself enough to know what will make you happy, what will give you joy, and what compromises you are willing to make and which compromises you're not willing to make, which is why at the end, it's hard for me to have regrets. And in the end, it's what ultimately has guided me in my professional career, which is eclectic, but that is consistent with who I am.
And some of the best architecture is eclectic, and it is both functional and beautiful, which is what you are building here. And I loved the way you said you see possibilities, because that is such a gift to our industry and to the emerging managers rising up in it. That and your bluntness or authenticity, as you described it, because I think there is a race against time with many of these managers. And sometimes we don't have time for the niceties and the lead in. Sometimes it is important to hear something that is authentic and real and unvarnished and is actionable. Would you have any advice for your younger self?
I would have advice for my younger self, which is, besides the idea that know yourself and to thine own self be true, I would tell my younger self to not be afraid to pivot, to change, and to adapt, and to take more risks earlier in my life than I mean, I'm taking risks now in a different way, but I think the ability to sort of take risk, to explore, and to be less fearful and to chart your own course is what I would tell my younger self.
So thank you for the service you're doing to the industry. I look forward to seeing Daraja Capital shine and thrive, and good luck with everything. Thank you for sharing your insights with us.
I appreciate you taking the time to talk to me. It's been my pleasure.
I'm Etienne. Thank you for listening to the 50 Faces podcast. If you liked what you heard and would like to tune in to hear more inspiring investors and their personal journeys, please subscribe on Apple Podcasts or wherever you get your podcasts. This podcast is for informational purposes only and should not be construed as investment advice, and all views are personal and should not be attributed to the organisations and affiliations of the host or any guest.